Bloomberg Audio Studios. Podcasts, radio, news.
All right, well, let's take a look right now at how crypto prices are doing. I want to bring in a very special guest right now. I do want to welcome our Bloomberg TV and radio audiences who are joining us now is ARK Invest CEO and CIO, Cathie Wood. Cathie, good to have you on the program this afternoon. I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Sonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market, and we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
One question I have to the point you're making here on where the risk appetite stands around Bitcoin versus other asset classes, there has been a serious dip in markets, Cathie. If you had to choose where you would buy the dip the most, would it be in Bitcoin, Tesla, or NVIDIA?
Oh, my goodness. Well, we post our trades every day, and you'll see that we've been buying Tesla and names that mimic Bitcoin and other crypto assets like Coinbase, like Robinhood, taking advantage of this risk-off period.
So what does this mean in terms of where you see things going? Do you see more of a sell-off before things get better in these risk assets, Bitcoin or otherwise? How do you know that we're not at the lows?
So one of the things we think is going on right now is, and Treasury Secretary Basak today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down, and we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening.
What do you see as the rate path for this year? The Federal Reserve kicking off its 2-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down, even egg prices have started started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation. Good deflation, which we'll call unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
Hey, Cathie, you and I have spoken quite a bit over the last few months. You were optimistic about the Trump administration, specifically with regard to disruptive technology and your thesis, but also with cryptocurrency. You just spoke about the easing regulatory environment around crypto. I'm curious, though, what you think about President Trump's relationship with crypto. The Wall Street Journal reported that the Trump family has held deal talks with Binance following that guilty exchange plea. And then also you have the president getting into meme coins. You have World Liberty Financial. Are you at all concerned that the Trump family is too close to crypto?
Well, I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem.
Cathie, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.
What about Trump's meme coin? Is that one of the ones that you think will become worthless, Cathie?
It's interesting. The meme coins will be collector's items, so digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much.
Cathie, I want to switch gears here a little bit and talk about something that I know you've been focusing on a lot, tokenization. Now, one question I have about this is, do you think the investment community, particularly the venture community, is underestimating how catastrophic this could be to their business model? If you have companies that can raise money through tokens rather than through traditional venture capital and go public this way or list this way rather than through the traditional listing process, is that a sea change coming for the way that this has typically been done?
I actually think it's very complicated, but in terms of our own venture fund, and we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many, many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well.
A little earlier, you said that when you look at these dips, you've been trying to take advantage of them, particularly in part through Coinbase and Robinhood. I have a question about Robinhood in particular. Do you think it looks more and more like Coinbase in the future? And to the extent that you're buying more of it, is it on the thesis of expanded stock trading among retail investors, for election betting, or expanded crypto trading? What of those three things is your favorite thesis?
Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners.
Hey, Cathie, we're having a little trouble with your connection. I'm going to let our team work on that. In the meantime, I do want to ask you a big picture question about crypto, because I think for a lot of people, they look at these tokens as stores of value, as bets that they'll go up in the future and they'll be worth more and their portfolio will grow as a result. When do you see use cases for crypto, maybe specifically Bitcoin, actually affecting us in the real world? You spoke about tokenization just now, but when will we see crypto being used as something else apart from just a store of value?
Well, I think what is happening with the stablecoin movement, which, again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth.
Cathie, you have the great challenge of investing in innovative solutions at a time where the market is nervous and discounting the idea of putting more money to work in innovation at the moment. And to the extent that you could choose one single biggest conviction bet that you would make right now, what is it and why?
We have been known for our Tesla call and our Bitcoin call, and those still stand as two of our biggest calls, for sure. I would add, in the AI age, platform as a service companies like Palantir, which are really enabling large enterprises to move into this AI age and enjoy the efficiencies, the cost effectiveness, and to create new products and services. Those, I think, are going to be very big as well.
Absolutely fascinating. ARK Invest, Cathie Wood, we thank you so much for joining us today, looking ahead of the curve a little bit and some thoughts on how to get into the ability to buy this dip. Thank you so much for your time.